All right, hello everybody. Hopefully you can all hear me well. Welcome to the MACROACE stream, running through the Google and Microsoft earnings. So what we'll do is we'll give a rundown of what to expect from what the breakdown of the previous earnings that they had delivered. What do they mean? What to look out for? And then the sentiment surrounding the earnings at the moment. So let's hello Dragos again, and Mickey Line says, "Are we trading price market, fellas?" Mickey Line says, "I love my Indian friends leading the US tech. God bless chumps." Good evening to Lee Sheehy as well. All right, so let's get into it. So Google with their previous earnings, let's do a little breakdown. So first of all, what we had is where the EPS was weaker than expected at $24.62 compared to the estimate $25.71. Rev was better than expected at $68 billion compared to the estimate of $67.98. Cloud revenue also a slight beat there of $5.82 billion compared to the estimate of $5.77 billion. Operating income was also higher than expected as well. Operating margin and cloud operating loss was at $931 million compared to the estimate of what we'd seen of $893.2 million. So do let me know if my mic is a little bit quiet. Hopefully you should all be able to hear me nice and clearly. But let's get further into it then. So Google services revenue, again, one of the key things that we'll be looking out for in their earnings report for today, alongside with their thoughts on the future outlook, particularly for the AI stuff as well. So the revenue was a miss on the forecast of $62.58 billion. Ad revenue was at $54.66, a beat. And Google other revenue of $6.81 billion, a miss on the estimate of $7.28 billion. So Alphabet also said that they're going to buy back additional $70 billion of Class A and C shares as well. Now, breakdown then. So overall, it was a mixed performance. So while it did exceed expectations in some areas, such as their total revenue, operating income, and advertising revenue, it did fall short in other areas like the EPS, cloud, operating loss, and revenue from certain services. So also talking about the decision to buy back shares, suggests that the company has confidence in its future performance. Of course, that would always happen, otherwise it wouldn't have occurred. And it's looking to, of course, enhance shareholder value through that move that is made. Then, in regards to the EPS and revenue data, so the lower than expected revenue EPS indicated that the profitability might be facing some challenges. However, the fact that they still managed to beat revenue estimates suggests that the company's overall business is still performing quite well. But there is potential for improved profitability in the future if they can manage cost effectively. Then if we look at Google services and revenue miss, so the shortfall in Google services could be a concern, of course, as that represents a significant portion of Alphabet's overall revenue. Then if we look at the things that to look out for in their upcoming upcoming earnings, I think Dragos, you did mention sort of providing some actionable things or things to kind of look out for when you do trade the market. So let's kind of break down this. So the basics, first of all, so if the core figures like revenue and EPS missed estimates, it could set up for a tough post-market reaction for them. However, we've seen it with the likes of Netflix, where they posted positive Q2 earnings, but the Q3 outlook was worse than expected. So that could be so just to add further to that though, that but if there are other areas moving on from the future outlook, if there are other areas Alphabet prove to be better than expected in, then what it could mean that could actually mitigate the potential bearish reaction if there were to be. So let's say the rev and EPS are a miss. But the other areas with the ad revenue and other services revenue is better than expected, then as said, that could mitigate how much the stock falls, if it does, or unless the market decides, okay, EPS and rev isn't great, but there is growth and strength in other areas for Google in order to give them a boost instead. So there's two ways to kind of look at how the basics when they come through, how that performs, and then how that affects the stock itself. So revenue diversification. So this is quite, of course, particularly with tech companies, when we're looking at revenue diversification. So for Alphabet, we're looking at, so of course, advertising, cloud services, any other products that they bring to the market, and what are other businesses doing as well in the same field. So of course, that if they do show that moving on, highlighting or adding to the earlier point that I made, if the other areas of Alphabet's earnings does perform better than expected, then again, it's another way to kind of mitigate the potential for the potential bearish reaction that it could receive if the initial data isn't that great. Now, cloud growth. So, of course, there is a continuing growth in cloud being brought to businesses. So, an increase in the market share through figures and comments will be the key highlights for Google. It will also be key to see if they're failing or falling short of cloud revenue or expected decline due to any external factors, and that could dampen the sentiment instead. If we carry on, then we look at advertising revenue. So Google's advertising business, of course, again, as I said, a significant source of revenue. Monitoring the trends, changes in ad formats, and competition from other digital platforms is going to be key, and shifts in consumer behavior too. Also talking about ad blocking technology. Has that hampered Google's ad revenue? And do they expect that to have a continuation of continued dampening effect on Google in the future, or will they find a way to get around the ad blocking services that are present? Then also the other thing to be aware of as well with the AI. So this is going to be the key thing that we're going to be talking about in this earnings report, and we'll be looking out for in AI. So of course they introduced, their product of Bard, which I've used myself. It isn't great. It doesn't. I've used it compared to ChatGPT. I found ChatGPT to be easier to use. Somebody said, what time is the earnings? So yeah, so the expected time for Alphabet is on the dot of the close at 4 p.m. Eastern time, or 9 p.m. UK. And then Microsoft, we have for Microsoft, we have them 5 minutes later after Alphabet report their earnings. But AI is going to be quite very key. Of course, you had Sundar Pichai, who emphasized that their commitment to providing helpful answers for users and highlighted the significant opportunities ahead, building on their track record of innovation. So that's one of the things that we had the comments from Pichai talking about AI very briefly. I just wanted to kind of go over that with you guys there. But if we keep moving forward, so Microsoft's previous earnings, let's have a look at what they've done. So their revenue was a beat. The EPS was also beat as well. Intelligent cloud revenue also beat, and personal computing again a beat. Productivity was also better than expected as well. So let's break down what does that mean for Microsoft. So with the strong financial performance. So Microsoft reported solid financial results, which for their revenue, as said, when they said it reached $52.9 billion, so that represents a 7% increase in year on year. So the company's operating income also grew by 10%, and the net income increased by 9% as well. Demonstrating more or less a robust overall performance from Microsoft. Then if we look at, again, AI and cloud focus, so they've been emphasizing the combination of advanced AI models with natural language, positioning itself as a leading platform for customers to leverage AI capabilities and innovate in the next generation of computing. Now, the cloud side of things, again, there with a revenue of $28.5 billion, that showed from what they had reported in their in the earnings report that was, according to them, an impressive growth of 22% year on year. Again, highlighting the company's success in the cloud market. Then if we look at the intelligent cloud growth, so intelligent cloud division has said generated revenues of $22.1 billion, which marked a substantial 16% increase. And Azure and other cloud services were significant drivers of that growth, with a 27% increase in revenue. Now, what do we need to look out for with Microsoft? What's going to be key for them? So again, I said same thing with Google and any other stocks that we do cover in the future. It's looking at the basics. Do the basics such as the EPS and revenue beat expectations? If they don't, how do the rest of the figures look for Microsoft? Do you see shortfalls in cloud revenue? As I said, if cloud revenue has been doing well and they expect it to continue to do well, if that falls short of expectations of what analysts might be looking at, or it comes in lower than expected, then again, that could cause the stock to take a bit of a hit instead, and that might mean for the future, for if they do talk about their future outlook, when they do, if the cloud revenue side is seen to be in a spot of trouble for whatever reason, then again, that's an obvious reason that could provide some bearish sentiment for the company itself. Unless they provide positive outlook instead, if they do have bad second quarter figures, again, that might mitigate the downside, and actually it could cause the stock to go up as a potential, as one of the potential scenarios. Then AI and innovation. So their leverage in AI across its products and services is also going to be quite key too. So the company's focus on AI and its ability to innovate with AI-based solutions, of course, is going to play a significant role in driving future growth. So AI, more or less, you're not expecting to see any of that stuff in the initial earnings report, but you're expecting comments from Microsoft talking about AI and where they want to take and how they want to build on that in the future. So, Battle of the Minds. This is quite interesting. Okay, so you have, of course, AI being not the new thing, but being the thing that everyone is kind of focused on within the tech space. How can they provide a better service for the customers? Can they provide a way where they, more or less, you don't need a person to kind of do the role for you? Let's say in customer services, you could just it could get to the point that where you're just sitting at a piece, you go to a kiosk and it predicts what you want instead. Again, so Google is facing quite a lot of pressure from ChatGPT, which is backed by Microsoft's OpenAI. So in response, what Google did is they decided to launch their own AI chatbot called Bard during the previous quarter. Now, as I said, the difference between Bard and ChatGPT, Bard isn't there isn't such a high quality. Bard isn't that great compared to when you use ChatGPT. If you guys have used it yourself, do let me know what your experience is with ChatGPT and Bard, and then it'd be quite interesting to see what you guys kind of think. But again, it's as I said, the battle of the AI minds. The tech companies have a very strong focus on trying to lead other businesses into the future. It's more or less it is a constant race to see who can provide the best AI setup for their business and, of course, for their customers as well. Then May 2nd, so this is one point that we need to understand as to what are the concerns that companies have about AI, and what it can do, what it has done, and what are the drawbacks of having AI. And then what I'm going to talk to you about is how that could link to what Microsoft and Google might have to say about AI. I have some of the companies such as Samsung who had concerns. So Samsung, what they did is they banned their employees using ChatGPT after discovery of employees uploading sensitive code to the platform, right? So data was transmitted. Data that's transmitted on AI platforms like Google Bard and being stored on external servers, they said that would make it more difficult to retrieve data. So not only does Samsung have issues with AI being able to store the information and then that not being able to retrieve it back, or not being safely contained in a way that secret or sensitive data isn't taken out of hand by someone else or competition and then used against them. There are other businesses too, other companies such as JP Morgan, Bank of America, and Citi that have said that they've either banned or restricted its use. So when we do talk about, that's what we'd want to look out for is if we have had the markets that have had a positive or a bullish surge on the potential for AI in businesses, in tech businesses. If we do get comments where in the outlook or in their commentary they say that AI isn't, if they go back on their idea and their thoughts and say that maybe there are some issues with AI that have risen, but they say they're going to work around it and they will try to sort it or make it work so it doesn't release sensitive data, or there is a safer way to share data with AI. Then that could mitigate, that could stop, that could mean that the stock market or the market surge particularly for tech stocks could potentially come to a halt if there are concerns that start to arise, and if the markets don't feel that those companies will be able to deal with those issues in the best of ways. So you will have traders that will start to speculate that actually, okay, this isn't great. Maybe these tech stocks are going a bit too far, and now it's probably better to look at what are their fundamentals look like, and what do they expect their fiscal year outlook to be like in the upcoming quarters. So investment bank views, so Morgan Stanley, and there's also the price upgrade as well. So Morgan Stanley said that cost cutting won't be enough to propel stocks further, and stocks will now need more confirmation of upturning growth that consensus expects in the second half. So again, not just focusing on the Q2 data, of course, with Microsoft, we're expecting Q4 data. But traders are more forward looking. We've had the likes of the Netflix and Tesla earnings that brought pain to the markets, particularly after market. Okay, so third quarter expectations from Netflix and Tesla's warning of further profit had ripped the NQ up post market. So that shaved off about $400 billion from the Nasdaq's market capitalization in a single day. The reason being is that, first of all, you have the Fed that have raised rates quite quickly to a quite high rate. They're expected to raise rates again. So they're looking to businesses for confidence. Do do businesses expect to do well in the upcoming quarters, or do they feel like they're going to be hampered by the tightening from the Federal Reserve? And that's when other issues start to creep in again for traders. Again, like I said, if the current data for the earnings is positive, but the outlook is negative, you would expect more of a mixed reaction from the stock if there isn't a clean slate of positive data overall and positive fiscal year outlook, or negative data with a negative outlook. But usually with stock earnings, you get a mix anyway. Rarely do you get the positive data paired with a very positive fiscal year outlook. Going back to Morgan Stanley as well, so on July 7th, you had that AI could prompt Microsoft to join Apple in the elite category with a stock market capitalization of more than $3 trillion. That was, again, according to Morgan Stanley's Keith Wise, who named their top pick among large cap software companies. So they raised the target price from $415 to $335, making it the second highest among analysts. And then if we look at Goldman Sachs, then where do they view the market as a whole, not just on the NQ or the stocks individually? But they said that the S&P's high valuation is reasonable, and the COI will rise further this year as laggards of the index join the surge in winners from AI. So again, the focus is on AI from what we've seen here. From what economists have been talking about and how we've seen the markets react to positive news of AI being used in more businesses or being used in more ways to increase revenues and build the company. All right, so let's get out of this. We've got about 8 minutes left. Want to get set up on the chart. So I did take your feedback last time around. So we're looking at Microsoft here. We've got about less than 10 minutes. No, earnings have not come out yet. So we're looking at Microsoft here in with the live chart here. We're also looking at Google with ticker GOOGL. That's the one we'll be looking at. But as said, we've also got the eye on the NQ as well to see how that reacts. So let's go over it again. The basics. If the data that comes out for the earnings is positive, and the fiscal year outlook is also positive as well for both companies, regardless of who you're looking at, and regardless of what it's looking at, then you'd expect more of a positive reaction from the stock. However, if we do get data that is more mixed, i.e. the initial data that we get, so as said, if we look at the what are the expectations then for for Microsoft and Alphabet. So of course, Alphabet, we have them coming out in about 6 minutes, and then Microsoft at 5 past the hour. So Alphabet's Q2 2023 earnings estimated EPS is $1.32 with an estimated revenue of $60.23 billion. Okay, so if we do get the EPS or rev that is better than expected, then you're looking to the fiscal year outlook to see if that's positive or not. If that's not positive, then you'd expect more of a mixed reaction of traders being, first of all, taken into account maybe that the fiscal year outlook is being hampered by the central bank and their tightening process and their tightening cycle that they're currently in. Okay, don't forget, tomorrow we've also got the FMC rate decision, so you can join me live for that as well. So again, as said, we'll be keeping an eye on the basics. Do both companies report with their product diversification? Do they perform more positive expectation, positive data for their other areas of revenue? If they don't, again, that could then lead to a negative reaction in that stock. Also a reminder for Microsoft, so if they do decide to come out on the hour as well, but as I said, they're expected at 5 past the hour. So Microsoft with EPS estimate of $2.55 and estimated revenue of $55.49 billion. Okay, and then finally, their comments on AI, if they do deliver it in their fiscal year outlook. Do they continue on with a positive view that they're going to enhance their businesses that they are providing with AI and that it is working well, or do they provide a less positive outlook, i.e., that they highlight that there might be some issues with AI, but they're looking to work around it and try and fix those issues. All right. Okay. So, got about 4 minutes left. So now, of course, Financial Juice, let's kind of go through this here. So as said, this is a new part of the service that we're doing, providing the stock market review of how a stock market review rather than just the economic data that we get normally. All right, so what we want is, sorry, just popped out there for a second. What I wanted to do is just kind of get your views. Somebody said, Josh said, lost audio. Nope, I just popped out. So what I want to get is your reviews on the service so far for MACROACE. If you find the information useful, put a thumbs up in the chat. Tell me if the information isn't useful. Again, in the chat as well. Your comments and your feedback is very important in how we build up the service in the future. And if there's something that we're missing, again, we're exploring, we're going into the stock market territory instead. As well, not instead. So we would really appreciate your thoughts about how the current data or the current presentation that I've given you guys, has it been useful? Also, there is a little survey that we would love you guys for you to do to give an overall view of MACROACE and your experience of it so far. So again, that would be really helpful to kind of gauge what you guys feel. Okay, shortly expecting Alphabet second quarter earnings. So, but yes, that survey is there. In general, how do you find the FinancialJuice service? What are the areas to improve on? What's proven useful? What's not useful? What's missing? All those kind of things will be very important to kind of very key for us to build the service. So don't forget to also like the video, subscribe to the channel, get the word out there, and we will be very shortly getting Alphabet earnings for Q2. So let's see what happens. Okay, so let's go Google here. So there we are. Let's kind of make that a little bigger. Okay. So that's the unofficial close there on the S&P. Still waiting for the data to come through from Google. Seems to be a bit of a positive surge. So us is still waiting on them to come through. Hmm. Did they already come out? I'm just trying to see if they already came out. Let me see if I'll go to the site. I'm gonna try keep an eye on this as best I can. So. Hmm. Okay, so Microsoft has come out first. EPS of $2.69, $2.69. That's a beat on the estimate of $2.55. A revenue of $56.2 billion. A beat on the estimate of $55.49 billion. Whilst I'm kind of reading through this, seeing so fourth quarter revenue from Microsoft. Causing Microsoft seeing a movement towards the downside here. Productivity revenue of $18.29 billion, a beat on the estimate of $18.1 billion. Intelligent cloud revenue of $23.99 billion, a beat on the estimate of $23.8 billion. More personal computing revenue of $13.91 billion, a beat on the estimate of beaten on the estimate of $13.58 billion. Alphabet now reporting their earnings. So revenue, EPS of $1.44, a beat on the estimate of $1.32. Revenue, also a beat as well of $74.60 billion, a beat on the estimate of $72.77 billion. Cloud revenue, also a beat as well of $8.03 billion compared to the estimate of $7.83 billion. What else we got here? So, okay, so Microsoft and Azure and other cloud service revenue growth of 26%. Going back to Microsoft there, apologies. What else? So Microsoft. So Microsoft said they'll provide a guidance on their earnings call instead. So there may be a reason as to why the stock plunged instead initially off of the figures, off of maybe not seeing any fiscal year outlook being provided. So going back to Alphabet then, so what else data we have? So operating income of $21.84 billion, again a beat on the estimate of 19.96. Second quarter revenue excluding TAC of $62.07 billion, a beat on the estimate of $60.27 billion. So Google did pretty well. They announced a plan for CFO transition. What else they got? So Google other revenue, I think I did miss that, was at $8.14 billion, a beat on the estimate of $7.17 billion. Okay, so let's go with Google. That's the simplest one here that we can see with the market reaction. So look at it in how many dollars. Okay. Okay, so it's about $3.75 move. Okay, on Google, Microsoft, let's just double check the time on that. So yeah, Microsoft, and then Alphabet. Okay, see what we have. Right, so there isn't any other bit of news for Microsoft that I can see, but it did on the initial reaction there was a tick. It did drop by $9.30. So there's some heavy selling there on Microsoft initially from the data that had come out. DLL says, do you have Discord? Yes, we do have a Discord. I don't have the link with me as of now, but if you're on the Pure Chat, if you go to our our service or our desk, news desk, and they'll be able to kind of ping it in. I'll see if I can find it myself, but I don't have it on me here. But yes, so if you ping a message to our boys on the FinancialJuice site, so if you go here, the news desk, and then ask a question about what the invite link to it. All right. So what else we got here? Okay, so the NQ. Let's see how that performed. So 601 was when the data had come out. So yeah, there's a bit of a whipsaw there on the initial candle, but let's see how it's where that candle ended. So that was about 91 ticks there to the upside, and then to the peak, what we see so far, about 305 ticks on the NQ is where it's peaked so far. So Microsoft, the data was better than expected. They didn't provide a fiscal year outlook. Alphabet did provide some fiscal year outlook after their data. Let's kind of go through it again. So what have we got? So Microsoft. Okay. That only need to have a little bit more of a look into it. But there we go. So Google smashed it. There we go. Enjoying that run there on Google. Let's kind of look at some of the other areas too. Okay, so let's go to Alphabet. Actually, I want to look at Microsoft because there's something that they've done which I need to have a little read through. Here we go. What do we got? Okay. Okay, so this is a bit more of a detailed view of the report itself. I'll bring it up for you guys here. So here we are. So organizations are asking not only how fast they can apply the next generation of AI to address the biggest opportunities and challenges they face. Nothing really out of here so far that's giving cause for concern why that initial market reaction had occurred. Okay, personal computing is where it seems to be where the decline might have occurred then instead. So personal computer was $13.9 billion and decreased 4% with the following business highlights. So Windows OEM revenue decreased 12%, device revenues decreased, devices revenues revenue decreased 20%. Okay, so personal computing revenue is what I think is where it seems to be at. So the rest of the data was positive. Also, they did say Microsoft did say they returned $9.7 billion in form of buyback and dividends in Q4. But it seems to be this is what I think had caused the initial downside move in the report for Microsoft here. Then, if their personal computing wasn't as good as they were expecting it, or if it's worse than what they had in the past. So search, news, advertising revenue, excluding tax, acquisition costs increase 8%. Let's see what else there is that they have. The rest of the report looks good. Just the personal computing bit is the only thing that I can see. Yeah, Dragos, Google did smash it. A beer on them indeed. So actually, let's have a look at the overall market then for Microsoft. We'll see where it was. Okay, let's go to the high time frame. If we're talking about the lows, yeah, let's go to Google. A 10-minute chart on there. Okay, so what else we got? So still not really recovered from its initial market reaction. But Google continues to fly. Again, not any strong mention of AI, just that they're going to continue to work on it instead. But yeesh, Microsoft is not having a good day. Okay, so ladies and gents, that concludes MACROACE for tonight. Tomorrow night is even more important. Why? Why is it even more important? It's because it's the FOMC, where the Fed is expected to raise rates by 25 basis points to 5.5% from 5.25%. So again, that's going to be quite key for how the markets will, of course, react. Will they price in another rate hike from the Fed, or will they start to say, okay, maybe this is where the Fed ends it finally, or do we continue to get, or does the market continue to feel pain or become confused as to what direction the Fed might go in? So what I'll do is I'll get the video link out for you as well. So don't forget, tomorrow I'm also covering Meta earnings as well. So let me get the link for the FOMC. Actually, let me get the playlist for you guys so you can look at all the videos that we have coming up. That'll probably be a much better idea rather than doing it bit by bit. You can just get that here. No. Okay, there we go. Boom. So that is a playlist for the week, so for the rest of the economic releases and earnings that I'll be providing as well. So, like I said, I want your feedback now. If you can, tell me, has this information been useful? Microsoft is not having a good time. Has this information been useful? If it has, why? What has worked? What hasn't worked? And then tell me what you would like to see being added to the service as well. I'm not just talking about, of course, with the stock side of stuff. There obviously is going to be a lot of more things that you guys would want in there, but I won't know what that is unless you tell me. You know, see, feedback is key with this stuff always. So don't forget to, so if you can now in the chat, let me know what there can be done to improve the way we run the service. Also, don't forget to sign up to the to FinancialJuice. So, of course, FinancialJuice is a live voice and text service, particularly if you're a day trader and you want to understand why the markets might be moving in a certain way. Then FinancialJuice is the place to be. So let me go over FinancialJuice. So FinancialJuice here. So you have your live voice service here. Okay, you probably can see my scroll banner, me scrolling up on the volume here. So you have your live voice and text service, so your news feed here, okay, of all the key headlines that you will need to be aware of as to what is causing the market moves or what could cause potential market moves in the future. On the left-hand side here, you have your FinancialJuice calendar. So not only do we have the economic data for different nations, but we also have, as you can see here, we've got our earnings as well. We mainly do the big earnings, right? We don't really look at the smaller ones. We're taking more of a macro viewpoint of the earnings of the stock market. Those companies that are going to have a bigger effect or wider effect, not just on the market, but also on the economy, and then potentially the global economy as well. So we've got Apple next week. We've already covered Tesla and Netflix. You also had United Health, of course, which when they came out with their earnings, it caused the Dow to fly off of their positive earnings that they provided. Again, so FinancialJuice is, so if you're a day trader, again, having access to live voice and text service is key to understanding how the markets, or why the markets might be reacting in a certain way, what could potentially cause the markets to react further down the line. That's all in one place. Okay, so a live voice and text service, if you are a stock trader, of course, FinancialJuice is more focused on the global macro environment rather than the micro environment, and looking at individual stocks, unless it's the big boys, and they're going to have an effect on the global economy. But again, it's if you have Fed speak coming through, Fed's Powell, of course that's going to affect everything, right? Whether you're trading forex or stocks. That's also another thing to be aware. That's also another thing to be aware of as well with FinancialJuice. So let me provide you a link with the 7-day free trial of FinancialJuice. Actually, first, what we need to do is, if you haven't subscribed to the FinancialJuice newsfeed, subscribe to it if you want to find out what the service is like. If you find it useful, if you find it fits in with your trading pattern, then do, of course, give your reviews and thoughts about it. And so this is a link here for FinancialJuice. So if you want to subscribe, so this is the pro version of FinancialJuice. Nice and clean. There are no adverts that are played. There are no delays, and it's all live in real time as well. Now, if you don't want to sign up to or if you don't feel ready to sign up to the pro version of FinancialJuice, of course, you have the delayed version of FinancialJuice. As said, that has adverts, that has a delay to the feed, voice and text, and economic data. There's also, as said, there's also advert banners that come through here and there on the delayed version, or the light version, let's say, of FinancialJuice. But it is still useful as well. Particularly if it's the first time you've come across a live voice and text service. Alan Martin says, your presentation, whenever you say that conveys more information than your words, usually negative. No, of course. I think when you're speaking live, I will keep an eye on it. Thank you very much for your feedback. Yes, I have also recognized that too. Sometimes it can be a little bit difficult, but yes, no, I take that on board. I thank you for your feedback. Any feedback is welcome. Whether it be good or bad. But he said, otherwise, see, he did it again. He said, otherwise, great stuff. Thanks. Thank you. So, if you're not ready to sign up for the pro version of FinancialJuice, then you can sign up to, if you just click on the link there, create an account, go to your email, activate the email, or more or less just verify that it's you that's made the account. If you want to go straight to the pro version, again, make sure you have an account first on FinancialJuice with a login and username. Then you can click on a button here that says Go Pro, and then pay for the subscription that you want. Go to your email, double check that you've verified your account, come back, log out, log back in, and then again that will act as like a verification, and you then should see this news feed that we have here for you. Okay, That's interesting. So Fed swaps resume pricing in 50% odds of a post-July rate hike. Let's see, what do we get? All right, so for the 5-year note, that's what it seems like has probably happened. Higher than expected bid cover, lower than expected yield though. That's also interesting to keep an eye out on. All right. So that is FinancialJuice. That is the live version of FinancialJuice. Also, one thing I did forget to bring up, which was TICKSTRIKE. So TICKSTRIKE, what it does is it allows you to listen to order flow, or another way to put it, it tells you how strong, it shows you how strong the buying or selling momentum is within the markets. So that's in Forex, crypto, stocks, ETFs and ETNs, and your internals as well. So on all, of course, your futures. So these are the options that you have here. So you have your Forex with a variety of Forex tickers that you can use, crypto as well, futures, stocks, it's a little bit slow, ETFs and ETNs, and your internals as well. So what are we looking at here? So what this shows here, this little box is what we call the ticker, and the negative number shows the selling momentum, or the strength of the selling momentum, and of course a positive number would show the strength of the buying momentum as well. Now the number here, what it represents is the sensitivity. The lower the number is, the higher the sensitivity is. So level 1 is the most sensitive to market reactions, i.e. when there's a little bit of buying or selling that occurs, then you will see, then TICKSTRIKE, as you can see there, will pop off. Now, the higher you make that level of sensitivity, or the higher you drag that up that little slider here, which you can chop and change to whatever you want it to be, if you drag it all the way to 15, 15 is the least sensitive to market reactions. So only when there's a big amount of buying or selling momentum that occurs will TICKSTRIKE pop off and provide you with a visual and audio alert as to the strength of the buying or selling momentum. So again, you can chop and change that to make it whatever you want it to be. Of course, you can change the colors. This is what I've just chosen here myself. And you can set the level of resistance as to what you feel it works for yourself. Okay, so that is TICKSTRIKE. So again, if you're a day trader, you're looking to scalp the markets, again, TICKSTRIKE is another tool to add to your arsenal. Particularly, let's say if you want to manage your trade, capitalize on potential volatility that you might see, momentum that you might see within the markets. Again, TICKSTRIKE is another tool to add to your day trading arsenal. If you don't want to go for the pro version of TICKSTRIKE, so there is a 7-day free trial of TICKSTRIKE, which I've put in the chat there for you. But on the website here, you have a basic version of TICKSTRIKE, which is fixed and you can't chop and change what you look at. But it gives you a basic idea as to what TICKSTRIKE could be like. So of course, this is the free version that you have on the newsfeed here. Wham Trader says, thank you very much. I'll try this for sure. Lee She says, thanks again, Tony. Thank you. And Wham Trader says, yeah, you are a day trader. Right. So yeah, so this is the basic version of TICKSTRIKE. If you're looking at the markets, but you're not sure about TICKSTRIKE and how it works, you can use the free version here. And although it is restricted, i.e. you can't chop and change the sensitivity, and you don't have the option to look at a bunch of different assets or different things within those asset classes. So again, but if that's something you want to kind of check out and try and get your head around it, then feel free to do so. The link has been provided there for you. And then finally, unusual activity. So if you like trading high probability stocks, futures, FX, and crypto breakouts in real time, then you can use unusual activity to do that there as well. Wham Trader says, is there any video? Yes, there should be on that link to give you a guide as to how TICKSTRIKE works and what are the other things you might need to know about it as well. Alrighty, ladies and gents, thank you very much for joining me live. Thank you for your feedback. Don't forget there is the survey that will be very beneficial to give us your thoughts as to what you think is working with MACROACE, what's not working with MACROACE, and then any areas that we can improve on, or any suggestions that we could use, or any other products or parts or any other bits that we could add to the service as well that we're doing here. Alrighty, other than that, thank you very much. I will see you guys tomorrow for the FMC. Big old day with the FMC. And have a nice evening and take care.